We're in the final stage, and what's coming is inevitable. Have you ever wondered what the very end of a financial bubble feels like while you're living inside it? Because most people never realise it until it's already too late. They wake up one morning, the headlines look the same, the markets are still green, the news is still optimistic, and yet something deep in the system has already cracked. The funny thing about bubbles is that they never tell you when they're about to burst. They just smile at you, giving you one last rush of excitement, one last illusion that everything is fine, one last opportunity to believe that this time will be different. But deep down, the truth is that every great market bubble follows the same rhythm, and right now that rhythm is entering its final, most dangerous beat. To understand what's really happening, make sure to stay until the end, leave a like, and let's start. The stock market is a strange creature. It feeds on emotion more than logic. It rises on hope and falls on fear, and it convinces people that they are witnessing something new when, in reality, they're simply repeating the same story humanity has told for centuries. The final phase of every bubble is the most beautiful, the most profitable, and the most destructive. It's the part where the gains come fast, where every dip gets bought, where people who had once been cautious start to throw everything they have into the market because they can't stand to watch others get rich without them. It's the stage where fear disappears, replaced by greed so powerful that even the most rational minds lose control. You can see it everywhere now. The endless optimism on social media, the experts on television who tell you the economy is stronger than ever, the investors who think risk doesn't exist anymore, the analysts who find new justifications every week to explain why prices keep rising far beyond anything that makes sense. It always begins the same way. First, there's innovation, a new trend, something real, something exciting. Then the profits start to come, slowly at first, then faster, and then the crowd notices. The crowd always arrives late, but once it's there, the market takes off like a rocket. Suddenly everyone's a genius, everyone's an investor, everyone's making money. The neighbour who never cared about finance is now giving advice. The student is day trading between classes. The retiree who once lived on savings is now telling his friends that he's finally figured out how to beat the market. And yet, this is exactly the phase that always comes before the fall. Because in this moment of euphoria, people forget what markets really are. They are not machines built to make you rich. They are mirrors of human psychology. They reflect greed, fear, hope, and denial. And when greed becomes too strong, when prices disconnect completely from reality, the mirror begins to crack. Right now, that's what's happening in slow motion. The signs are there, hidden in plain sight. Corporate profits are slowing down, debt is rising, and yet stock valuations keep climbing as if the laws of economics no longer exist. Companies that barely make money are trading at prices that assume decades of perfect growth. The public no longer asks what a business is worth. They only ask how fast its stock can go up. This is how every great bubble behaves before it breaks. In the early stages, fundamentals drive the market. In the middle stages, momentum takes over. But in the final stage, pure emotion becomes the fuel. The same pattern has repeated in every major episode of financial mania, from the roaring 1920s to the dot-com boom to the housing bubble of the 2000s. At first, everyone thinks they're investing in something new, but by the end, they're only investing in the idea that prices will never fall. And that's where we are now. If you look at the market today, it's not just rising, it's accelerating. Every small dip is followed by an even sharper recovery. Every piece of bad news is instantly ignored. The same companies are being bought over and over again, not because their earnings justify it, but because people fear missing out on what they believe is a never-ending rally. There's a word for this. It's called the blow-off top. It's the point in every bubble where prices go vertical, where logic dies, and where the final wave of money floods in. It's the phase that feels the most euphoric, but it's also the one that hides the most danger. Because from that peak, there's only one direction left to go. And what's even more interesting is how the psychology shifts during this phase. Just a little break. I opened a free Telegram community where I teach how to earn money with YouTube and build channels like the one you're watching. If you want to understand how to do it, there's the link below, back to before. People stop asking whether something is overvalued. They start finding new ways to justify why this time is different. They say inflation is under control. They say central banks will always step in. They say technology, productivity, and innovation make old valuation rules irrelevant. But history always answers the same way. It reminds us that bubbles don't end when people realise they're in one. They end when there's no one left to buy. And the reason this phase is so dangerous is because almost everyone is already all in. You can feel it in the numbers. Margin debt, the money investors borrow to buy more stocks, is at record levels. Retail participation, meaning ordinary people trading the market, is higher than at any other time in history. The average investor no longer saves. They speculate. They treat the market like a casino that never closes. The institutions know this. The insiders know this. That's why, while the crowd is still buying, the smart money has already started quietly taking profits. They're not panicking yet. They're patient. They've seen this movie before. In the late stages of a bubble, time feels distorted. Each day looks like a new opportunity, but in reality, it's the same opportunity, over and over again, stretched thinner with every passing week. The charts look unstoppable, the profits look endless, and people start convincing themselves that maybe this really is a new era. They use words like revolution, transformation, unprecedented growth, and for a while those words seem true, because momentum itself becomes the justification for higher prices. Stocks go up because they're going up. That's the logic of the final phase. But underneath the surface, cracks are forming. Volatility starts to creep back in. You begin to see strange price movements. Days when good news causes the market to fall, or when bad news is completely ignored. You start to hear stories about people taking massive risks, about small investors turning huge profits overnight, and then losing them just as fast. The system begins to shake, quietly at first, then louder. That's how bubbles whisper before they scream. You see, every bubble has two sides, the visible side and the hidden one. The visible side is the euphoria, the headlines, the soaring portfolios, the belief that the future has already arrived. The hidden side is the leverage, the debt, the silent build-up of risk that no one wants to talk about. Right now, the hidden side is growing faster than ever. Corporate debt is at all-time highs, consumer debt is rising, and governments are still printing money to keep the illusion of stability alive. But illusions never last. They crack the moment confidence fades, and confidence, as history shows, can vanish overnight. There's a certain irony to this stage of the cycle. People think they're becoming richer, but what's really happening is that money is becoming more fragile. They see the rising numbers on their screens and confuse them for real wealth. But those numbers are only promises that depend entirely on the next buyer being willing to pay even more. It's a chain of belief, and when that chain breaks, everything falls. The truth is, markets don't fall because of some mysterious external event. They fall because belief collapses. And once belief is gone, nothing can hold the prices up. Think about it. When was the last time you saw investors this confident? When was the last time you saw the crowd this sure that the market will never fall again? It's always the same emotion right before the storm. The charts look perfect. The mood feels unstoppable. And yet behind the curtain, the pressure builds. Central banks start warning about asset prices. Analysts whisper about unrealistic expectations, but no one listens. They never do. Because in the final phase, people stop listening. They only look at the green numbers and convince themselves that as long as it's still going up, everything must be fine. But markets are not kind teachers. They don't warn you twice. They just take everything back faster than you can react. And that's what makes this phase so deceptive. It feels like paradise until the very last second. The correction always starts small. A few down days, a few headlines, a few investors saying maybe it's time to take some profits. But by the time the crowd notices, the smart money's already gone. And once the selling starts, it feeds on itself. Prices fall, fear spreads, and suddenly everyone who thought they were a long-term investor becomes a seller. That's how the cycle ends. Not with logic, but with panic. The funny part is that even now, as we stand at the edge, most people still think they'll be able to time it. They tell themselves they'll get out right before the crash. They'll know when it's coming. But no one ever does. The top of a bubble doesn't announce itself. It disguises itself as another rally. It makes you believe that the dip you're seeing is just another buying opportunity. It convinces you that you're smarter than the crowd, when in reality, you've become part of it. That's how the market traps the last buyers. It gives them one final taste of victory before taking it all away. So what happens now? The final phase doesn't necessarily mean the bubble will pop tomorrow. It can stretch longer than anyone expects. Prices can keep climbing, fueled by optimism and liquidity. But each new high adds more weight to the inevitable fall. The higher it goes, the harder it falls. That's why this period is so dangerous, because it rewards the riskiest behaviour right before punishing it. It makes people think they're financial geniuses right before reminding them that they're human. History has shown us this pattern over and over again. The South Sea bubble, the railroad mania, the roaring 20s, the dot-com explosion, the crypto frenzy, all of them looked unstoppable until they weren't. All of them ended the same way, with disbelief, denial, and destruction. And now we're watching the same movie again, only with different actors and a bigger budget. The charts may look different, the headlines may sound new, but the psychology hasn't changed. It never does. Oh, I want to remind you that if you want to build a YouTube channel like this, I can help you in my free Telegram community with the link below. Right now, we are living through the final phase of this global stock market bubble. The phase where everything feels easy, where every investor looks like a genius, where risk is invisible and reward feels infinite. It's the moment where greed silences reason. And for those who can see it, it's also the moment to prepare, not to panic, but to understand that this illusion cannot last forever. Because when this phase ends, and it will, the speed at which the tide turns will shock everyone who thought they could outsmart history. So, when you look around and see the markets still climbing, when you hear people say this time is different, remember, every generation has said the same thing, and every generation has learned that it never is. The final phase always feels like the peak of prosperity, but it's really the beginning of reality returning. The calm before the storm, the silence before the fall. And when that fall comes, it won't be because of some mysterious event. It will be because of us. Our greed, our fear, our belief that we could keep playing the game forever. That's the real lesson every bubble teaches. The market doesn't destroy wealth, it just transfers it. From those who arrived last to those who left quietly, right before the music stopped. The bubble's final phase has now begun. The question is not whether it will end, it's who will still be standing when it does. Whether you will subscribe or not. Smash that subscribe and like button, let me know your thoughts in the comments. And I also want to remind you that if you want to build a YouTube channel, like the one you're watching now, and make money from it, I opened a free Telegram community with the link below. See you there, or in the next video. Just a reminder, I'm not a financial advisor. This video is for educational purposes only, and any results depend on your own decisions and actions.